All right, welcome back to another video. Welcome to World TFX Academy, where we teach you how to trade the true way, the way that we learn to trade, give us the freedom that we need to spend time with our family, go to the gym, study, work, do whatever else that we want to do because we trade the higher time frame. So today we are going to cover market structure. To be more specific, we're covering a downtrend market structure, identifying the lower highs and the lower lows. As always, everything that I'm about to go over is in my book. If you want this book, this is the Success Insight Volume 2. This book covers everything that you need to understand when it comes to market structure itself. This is a hands-on book where you will go over market structures, trend lines, zones, double tops, double bottoms, break and retest, but everything in here is for a selling market. This is a 60-day workbook challenge. You locked in for 60 days. By the time you finish with this, I guarantee you will become a better trader. All right. So if you don't have the time to be in course, be in a Zoom, so this right here will be the book that you need. And also, any traders that's new that wants to start trading, I recommend this book for you because it's going to teach you the ins and out when it comes to market structure, understanding how the market is moving when it's in a bullish trend and when it's in a bearish trend, how to properly identify and mark your zone. All right. So let's go ahead and just jump straight into that real quick. All right. So first thing first, let's go ahead and knock out our rules. So just like before, like any other time, right? When it comes to the market itself, we want to make sure we understand what it is that we are doing. So remember, all rules is all market psychology. All right. The way you trade, when you trade, where you place your stop loss, what kind of entry you take, where your technical analysis is based off, and at what time you take these trades, the lot size and the stop loss. Now, rule number one, as a trader, when again we are back testing. Rule number one is the time frame that you trade. When I say the time frame that you trade, I mean what time frame is that set up based off? Is it based off the monthly, the weekly, and the daily, which are the time frame that we use to do a technical analysis, which are the time frame we look for or trade or buys and all sales. So rule number one is the higher time frame, which are the monthly from the highest to the lowest, the weekly, and then the daily. So any zones, any setups that you are looking to enter in has to be either based off the month, the week, or the day. So we want to see the bigger picture, the overall trend, if the market is going to buy for the month, or if the market itself is going to sell for the month or week or the day. Okay. We want to be with the big picture. Now, rule number two is what time frame are we going to use to execute, the time frame that we use to pull the trigger. All right. So the time frame we use to enter our trade is going to be the 4-hour time frame. Okay. Also known as the H4. All right. So that's the lowest time frame we will use when it comes to either entering for a sell or entering for a buy. Just so you understand, once you place the zone and rule number one, the monthly or the weekly, also the daily time frame, you drop down to the 4-hour, it will be the same zone. Okay. Now, rule number three is when you go to the 4-hour to execute or enter for a buy or a sell, you're looking for price action. The price action we're looking for, right? That's rule number three, price action, which is, abbreviate that, PA. PA is price action. Okay. All right, meaning price is currently at the zone, it's at a current level. It is now time to take action, and it will give you a specific candle that indicate that buyers have now taken over or sellers have now taken over. Now, if you are new to trading and you want a better understanding of when to buy, when to sell, or also if you've been trading for a good minute and you are having a hard time understanding when to buy the market, when to sell the market itself, I do have the ultimate price action available now on Amazon. This book is it's a really dope book. It has all 6 different variation of the bullish engulfing that the market will always give you when it comes to buying, and also all 6 different variation of the bearish engulfing that the market will always give you before it sales. Okay, there is no if, there's no but. I guarantee you that it will always give you that. So if you go on Amazon, type in Royalty FX Academy, you will get the 7-book collection. Go ahead and pick up the price action. All right. Now, rule number 4 is our SL, meaning our stop loss, where we place our stop loss. Okay. Stop losing. That's pretty much what it stands for. Okay. Oh, that's our stop loss. All right. And of course, when we take our trade based on the trade that we take, either if we took a buy or a sell, our stop loss will go at the last low if we took a buy. But if we took a sell, our stop loss will go at the previous high or the last high. To be more specific, lower high. Okay. So those are the rules. Okay. So, and now, if you think about this, right? If you go over these rules again, this is your technical analysis. This is your trading psychology. It keeps you from deviating from your trades, and you don't hesitate. You don't have any questions. You're not afraid. There is no FOMO. There is no doubt. Why? You wrote down everything you're about to take, right? It's a check mark. When you go to the chart, you do your technical analysis based on one of these time frame. Check. All right. So whatever the setup may be, double top or a double bottom or a break and retest, right? And then once you place your zone accordingly, you just drop down to the 4-hour time frame, right? So it's going to be the same double top or the same double bottom in the 4-hour time frame, and then you just simply wait for your price action. And also, the price action that we do trade is the engulfing bar, right? We trade the engulf bar, okay? The engulfing bar. All right. I mean, the price action that we trade is the engulfing bar, right? The engulfing bar tell us that either one, buyers have taken over, or two, sellers have taken over. Okay, so the only price action that we trade is just that there's 6 different variations for bullish and 6 different variations for a bearish. Okay, so one, we already did our technical analysis on a monthly time frame, weekly or the daily, and then we drop down to a 4-hour, which is the lowest time frame. Now all we got to do is just wait for our price action, right? We already have the setup. Now all we waiting for is the price action, and then we drop and we wait for our PA. That's rule number 3, right? Since we only take the engulfing bar and we trade the 4-hour time frame, that means our price action is going to be available within a 4-hour interval, either 1, 5, or 9 a.m. or p.m. You don't have to sit in the chart or wait for it. All you got to do is just come to the chart and take a look at it. If you're somebody that trade the London session about 5 a.m., right? Last 4 hour would close. If you trade the New York session, 9 a.m., right? If you trade towards end of New York going towards Asia, 1 p.m. The new day or the middle of Asia itself, 5 p.m., right? And then so on and so forth. And then from 9 to 5 and then 1, 9, 5, 1, 9, 5. So, and not only just that, you know exactly around what time the price action may be available for you. That way you don't have to sit there and wait for it. And of course, after you take your trade, right? After you took your trade, you place your stop loss accordingly. All right. So these are all rules. Okay. So always remember that when it comes to trading, your rules are your technical analysis. You follow them step by step. They are your market psychology. And also, if you are having a hard time with your market psychology itself, I have the Discipline Paradox. That's my #1 seller out there right now, available at Amazon. This book right here, small, straight to the point. This book right here gives you the step-by-step guide as far as what it is that you need to do to become successful as a trader. Okay. Like, this is not about stories of other individuals going to the moon, starting a farm. This is literally step by step what you need to do, right? It's going to tell you exactly what you need to do. And then you should be just fine. That I could guarantee you. Okay. But you have to put in the effort. All right. So with that being said, let's go ahead and go over let's do a little bit of this real quick. So just like I mentioned before, when it comes to back testing, all back tests has to be based off the higher time frame. So just so you understand, the back testing is pretty much you going to the past, seeing what the market did before it bought, what the market did before it sold. That falls hand in hand with our technical analysis. All setup is either based off the month, the week, or the day, either a double bottom or a double top, like so, right? Let's just do this real quick. either a double top, right, or a double bottom, right, so on and so forth. So it doesn't matter what time frame, either monthly, weekly, or the daily. So either if you're looking for a buy or a sell, everything is based off this. So for the most part, that's pretty much what we're about to do. So we're going to be transitioning from interacting with the smart board where we draw everything out when it comes to structure itself. And then we're going to go ahead and jump into trading view where we go ahead and identify the lows and the highs for a downtrend. Okay. So also, just throw that out there since we're covering a downtrend. I want to make sure you guys understand that a downtrend is a bearish market. It's a market that is selling or a market that is going down, right? So when it comes to a bearish market, you look for structures, characters like low highs, right? And lower lows, right? So we're gonna go ahead and annotate real quick. We're gonna draw them out real quick. So here is we have a bearish trend or a selling market where it's falling, right? Now, also, let me go ahead and throw that in there. That way we make sure we understand what it is that we are doing, that we're in the same page. When it comes to drawing zones, I understand in turnaround points, you always want to use the line chart. So yes, first you do monthly, weekly, looking for your setups. And when it comes to marking your zone, you always use the line chart because the line chart show you the exact turnaround point of the market. Okay. The line chart show you the exact turnaround point of the market. And then you go ahead and use the candle in between the turnaround point and the candle. That is your full zone. So from the close to the end of the wick, that's full liquidity. What that means is people's stop losses are there, pending orders like buy limits, sell limits, okay, and TPs are out there. So market technically go in there to grab orders before it goes where it needs to go. All right. Now back to this. So here we have a bearish trend or a selling trend, a falling market. Now a selling market will always give you lower lows, okay, and low highs, right? Where each low is lower than the previous low, right? And each high is lower than the previous high. So, right, lower highs, okay, and lower lows, like so. So if you're paying attention, right, the market went and stops here, and it went up. That's the previous low. That's the low it gives you, right? And then it went up, stopped there to go back down. So this is a high, right? And then when it breaks this low, now we have a new low that's lower than the previous low. Okay, that's structure itself. Okay, and then it bought back up. When it went up, it stops at this point, and then it's sold. At this point now, we have a new low high. Again, it's called a lower high because even though it's high, but each high is getting lower than the previous low. Okay, very simple. And then once it breaks previous structure point, again, as you can see, right, stops here, then goes up. Now we have a new low. See that? Again, each low is getting lower than the previous low. Also, when it comes to trading a downtrend, all entries has to be based off the low high, right? So it has to be after the retest, right? So market breaks. Once it goes back up, you wait for your PA, okay, to take your entry. Your stop loss goes at the previous high, okay? It's very easy. 1, 2, 3, 1, 2, 3. All right. As you can see again, market bought up, right? Stopped there and then fell. That's a low high. And then boom, to give you a lower low. Now, of course, at this point here, when the market bought up to give you another high, it went past the previous low high. Now we have a higher high. All right. That's just one of the first things that the market is going to give you before it gives you a trend reversal. All right. That will be one aspect of it. So I did more than one to go over. That way you see more than one different structure itself. Now, we're going to see how it would look like. All right. Now we're going to see how it would look like if the market was to break the high to continue up and then to come back down, meaning going from a bearish trend or selling trend, right, to a bullish trend and then back to a bearish trend. Now, just like before, downtrend, seller market, lower low. So the bottom points are your lower lows, okay? And then the high points are your low highs, all right? Just like so, all right? Bottom points, lower lows, top points or low highs. And again, you wait for the pullback. What do I mean by that is once market breaks a previous low, you wait till the pullback, right? And then after market give you a price action, to be more specific, a bearish engulfing, one of the sixes, you'll take that for the sell. Now, please understand, all this markdown will be based off your higher time frame, either your monthly, your weekly, or your daily. So remember, technical analysis is based off the higher